Henkel is one of the biggest and strongest consumer goods producers in Germany and achieved a revenue of 20 billion euro in 2021. The three business areas, adhesives, detergents and hair care, certainly do not belong to the most exciting products in the world. But Henkel has an incredibly strong market position in its niches. They dominate the adhesives, sealant and surface treatment business as the absolute world market leader, with its main brands Loctite, Patex and Ponal for both industrial and consumer applications. Henkel's detergent and home care business is led by its iconic brand Persil, which was invented 115 years ago as the world's first self-activating laundry detergent. And also in their hair care division, they hold a leading position with their major brand Schwarzkopf, next to several other sub-brands, serving the consumer and the professional hair care business. After several years of proper growth, Henkel's revenue stagnated in the past 5 years. The corona crisis had of course also an effect to their business in the recent 2 years. The massive reduction of the stock price of the past 5 years doesn't really fit to the commercial picture Henkel provides. This is especially surprising when you look at the development of the free cash flows. Only last year made an exception when it became visible that not even Henkel is completely immune against corona. The free cash flow dropped by nearly 40%. The basically stable business and the still healthy free cash flows enable Henkel to continue its long and steady series of dividend payments. For the year 2022, Henkel expects a stable dividend payment of €1.83 per ordinary share and €1.85 per preferred share, which is a yield of about 2.9% at the current share price of €64. Henkel's balance sheet is also in a very good condition. The majority of the 12.9 billion euro debt is already covered by the 10.4 billion euro in current assets. The shareholders' equity amounts to about 2.3 billion euro by my calculation, wherein I didn't include the intangible assets and the goodwill. I consider this as a very healthy asset and debt situation. The stock price halved in the past 5 years, but I still do not see the stock as an absolute bargain. Even if you do the calculations with a bit more optimism and use the 5-year average of the free cash flows as a starting point, Henkel would still have to grow with 8.5% to justify the current share price and our desired return on invest of 10% per year. The not considered goodwill and intangible assets of 16.5 billion euros make up for another 38 euro per stock and would serve as an additional margin of safety. Henkel itself projects to grow with about 3 to 4% per year in the next years. And this is the main criticism I have: the utter lack of ambition. With a growth of 3 to 4% of the global economy, I'm missing the spirit to perform better than the markets. A company that is as strong and well-positioned as Henkel should have the aspiration to beat the markets. It seems that Henkel realized this as well, as they just recently started a bigger restructuring program that includes the merger of the detergent and home care division with the hair care business to create one big consumer division with a target to gain synergies and improve the profitability. Henkel intends to continue to strengthen its business divisions with acquisitions of companies and brands that enhance their market position and business even further. They just recently acquired the hair professional business of the Japanese giant Shiseido, which will improve their position in the Asian hair care business massively. Henkel is one of those very few companies where I'm very sure that even the children of my children will still be buying its products. The moat around its economic castle is just enormous. The high free cash flows and the healthy balance sheet situation will allow Henkel to strengthen its business even further in the future. Even though the stock price decreased a lot in the past years, I'm not sure if it will ever be a real bargain, considering the extremely stable business and the strong market position. If you want to watch the analysis of another great company, you should click right here. Don't forget to like the video and subscribe to my channel, and please read the disclaimer. I'm not a professional investment advisor. See you in the next video.